All right. Good morning or good afternoon again, everyone. Thanks for joining our webinar today, Building a Scalable Process for Use Tax Compliance, with an overview of our new Use Tax Manager solution. This is Mark Christensen with Sovos. Again, thanks everybody for joining. We appreciate you being here. I'm the Director of Product Marketing for Sovos for our Enterprise Sales and Use Tax solution. So I've been with the company for about 5 years, working across a variety of different industries within our organization. And my role is really helping the organization work with folks like you, all of you on the call today, whether clients or potential clients, on understanding what challenges you're facing in the market and really aligning that and making sure we're building the best solutions to serve your needs. With me today as well from Sovos is Tim Roden, who's our Senior Solutions Engineer. Tim, you want to say hi to the folks quick?
Sure. Good afternoon. Tim Roden, Sales Engineer here at Sovos, and I'm really excited about today. This is a challenge that a lot of customers have come to us with to say, hey, how can we solve this use tax challenge? And really excited to share what we've put together with you today and get some feedback on it.
Excellent. Yes, and our special guest today, we're very excited to have with us Mark Rems, who is a partner with Grant Thornton, who is a subject matter expert on all things tax and has a special passion, I think, for this use tax compliance subject. So, Mark, you want to introduce yourself quick?
Yeah, thanks for the intro, Mark. Hey, everybody. Good morning, good afternoon. My name is Mark Rems, partner in indirect tax automation, and I head up our service line nationally for Grant Thornton. I'm based in our Philadelphia office and have been implementing solutions like Sovos Taxware Enterprise, Taxware SUT for the past 20 years, integrating with custom billing systems and a lot of canned ERP systems out in the market.
Excellent. Thanks, Mark. So we're, as Tim said, I think we're all very excited to share with you the agenda that we have today. So what we're going to cover today in the next hour is really starting off by talking a little bit about some of the market trends we're seeing and risks related to tax compliance, specifically around purchases. I know for a lot of you and a lot of folks that we talk to, the sales side of the business typically gets a lot of attention relative to sales tax issues. But we really want to spend some time digging in on this purchasing side, both from a sales tax standpoint in terms of what your vendors may be charging you, but then also this whole concept of use tax and some of the challenges around that, and show you a solution to really help you manage the process. We're going to talk a little bit about the challenges that are going to get in the way of getting that tax right on the purchasing side of the business. Mark's going to help take us through some various approaches that organizations are using today for use tax compliance and vendor tax validation. And then Tim will take us through the use tax manager overview, and we'll have a few minutes at the end for Q&A. So again, as I mentioned, the webinar will last for approximately 60 minutes. We'll leave the last 5 minutes open, and it's been reserved for Q&A. Just to give you a heads up, we will have a few polling questions as we move through the presentation today, so look out for those. We'd love to get some feedback from all of you on how you're approaching different aspects of tax compliance on your purchases today, and we'll share that information with you as we go through the presentation. If you have questions, you'll see in the control panel pane, which is probably at the right of your screen, there's a spot for questions in there. If you can type in your questions there, we'll keep those and hold those to the end, and we'll answer as many as we can. And then one of the most frequent questions we always get is, will I get a copy of the presentation and the recording after the fact? And yes, you will. So look for that follow-up email after the presentation. That'll be coming out shortly afterwards. So with that, we've got a lot to cover today, so we'll dive right in. And we'll start off with this first section, really talking about some of the common tax challenges on purchases. And I think one of the advantages we have as Sovos is we work with 5,000 clients across our business, and a significant number of those are leveraging our sales and use tax solutions, among other tax technologies. And so we have a really good pulse on the market and what's happening within the market, and definitely see trends in what we hear from the folks that we work with. One of the trends that we have been tracking, which has been happening for a while, but is beginning to accelerate and become more acute, is we're really seeing regulators begin to adopt more technology. And what the implication of that is that this audit scrutiny is not only increasing in terms of the number of audits that you might be incurring, but then also the scrutiny in terms of what regulators are looking for is getting harder and harder to manage. So in the same way that as you think about your organization and how technology has really changed the landscape around different ways you can go to market, different business channels in terms of how you sell things and how you buy things and how that data comes in, and the different technologies that you've been able to implement to manage your financial processes and different sales channels. If you're a manufacturer, different production technologies and how technology has really changed business opportunities and how rapidly it's causing your organization to evolve. We're seeing that also in the regulatory environments, and it's not surprising then that regulators at the state level, county level, federal level are implementing new technologies as well, as they understand the importance of really looking at data in order to make sure that the organizations that are responsible for collecting and remitting the tax is getting to the proper jurisdictions and that everybody is getting all the dollars that they're owed. I think, as most of you know, that most jurisdictions or governments are looking for every penny that they can and are increasingly looking to the business community as the tax collector through these indirect taxes. So we're seeing this increased frequency for sure, but then also scrutiny in terms of the data that regulators are looking for. In fact, I know we were just talking to a client in Texas who does business in California that said the auditor there basically came to him and said, hey, can you just send me all of your sales data and then we'll go through it and look at it. So that's the type of thing we're starting to see, is really getting down to looking at the invoice level data, looking at the transactional data. And that's making it harder for tax teams to manage that, making the audit process a lot more complicated to manage, and then also more time consuming, and then having availability to that data is one of the key issues that we see in the market. So last spring we did some research with Aberdeen, and this was definitely a trend that we were noticing in the marketplace, where 40% of the organizations that responded said, you know what, over the past couple of years, yes, definitely audit frequency and scrutiny has increased. And then we also asked, as you look forward over the next 3 to 5 years, how are you thinking about that? And 50%, nearly 60% said, yeah, you know, we expect that audit frequency is going to continue to increase over the next 3 to 5 years. And so managing that is going to continue to be at the forefront for organizations. We also did some additional research just recently with a group called ASUG, which some of you might be familiar with. It's a global Salesforce user group community with about 150,000 members. And so we were excited to engage with them on some research. And we did some research with them specifically on the tax compliance and the procure-to-pay process. And I think this particular slide shows some of the implications of that increased audit scrutiny, specifically around audit issues around use tax and tax treatment on the purchasing side of the business. So you can see a fairly, you know, about 20% of the respondents said, you know, we haven't really experienced much issue with this yet. Another 25% said, you know what, yes, we have started to experience some issues around audit penalties on the use tax side of the house and the purchasing side of the house. And again, this is per audit. So again, if you're a larger organization or even a mid-sized organization, you might be dealing with 2 or 3 audits at any given time, or as many as 5 or 6 or more per year. So again, even on a few of these, let's say it's less than 25,000, these things can add up significantly. And then you can see as we go through the higher levels that, you know, there's a significant portion, again, probably 50% or another 30% of the market that is experiencing some level of penalties on their purchases. I think one of the things that really jumped out, though, through the research is that a really big chunk of folks don't really know or don't understand and don't have visibility to that audit risk on their purchases. And that's going to be a common theme that we'll talk about as we move through the presentation today. All right, through that ASUG research that we did, we also asked, and again, this is specific to purchase tax compliance, what were the biggest issues that you were trying to deal with as an organization in terms of really managing this process? And we really want to focus here on the top 5. And as you look at this chart, there's 2 different bars on this. The blue line really represents the aggregated total of everybody who picked that particular challenge as one of their top challenges. And so that really says in aggregate which ones got the most votes, if you will, in terms of the biggest challenges. And then the gray line within that indicates how many people picked that as their biggest challenge. And so you can see this, how the stack ranking really plays out. But you can see the number one issue that most folks are dealing with is really the time to verify accuracy of tax charged on vendor invoices. So as we talk to folks, and I know Mark will dig into this a little bit more in just a little bit, this is one of the biggest challenges people deal with in terms of the volume of invoices coming in, trusting their vendors to possibly calculate that tax correctly or exempt correctly, and just trying to manage the volume of that. In a manual fashion, it's nearly impossible depending on how many invoices you have. And spot checking is one of those things that's very time consuming and not overly accurate. And so there's various approaches you can take for that Mark will talk about in a bit. Too much IT support needed during audit. I think this goes back to that earlier point that I was making around audit. Again, as audit frequency and scrutiny continues to increase, especially on the purchasing side, when you think about all of the various, not only sales channels that you have as an organization and the various technologies that you might be using for that. On the purchasing side, most organizations are also using a group of different technologies for that. You might have a fairly formal PO and AP automation process, but you might also be going directly to a vendor. You might be using a P card. You might be having folks buy things online through Amazon or other online Office Depot or Office Max, whatever it might happen to be, other different online marketplaces. So you've got all these purchase transactions coming in through these various technologies, and all that data, trying to bring all that together, and you'll see that as one of the other issues here in terms of bringing data together from the various systems, is challenging. And then finding that data and having access to that data is one of those things that's challenging for organizations. All right, sorry about that. We got a little bit of feedback there. And I think it also illustrates another issue here that tax teams in particular struggle with, is that the reliance on other groups, particularly IT, to get access to that data. And tax teams really wishing, you know what, I wish I had an easy way to get my hands on that data and more control of pulling that together so we could streamline that process and make it a lot easier. Managing use tax calculation and accrual, manual and time consuming. I think most of you who are joining today can probably relate to that in some fashion, really understanding, you know, what did you buy across the organization, all the different folks that are buying things, whether those are fixed assets or their software subscriptions or their services. Lots of different taxability implications of those in terms of what it is, where it was bought, where it's being used. Anybody who's tried to break out a software subscription to like 20 or 30 different jurisdictions based on where the people are using it understands what an issue this can be. And so we'll talk a little bit more about that too. And then the last couple, as I mentioned, are really around this issue of data. Where does the data live? Trying to bring all the data together. And then in a lot of cases, the data isn't complete to really do an accurate assessment of it to understand, is there a self-assessment required here in terms of what this is or not. So these are some of the most common challenges. Hopefully but you're probably seeing some of your internal organizational challenges reflected here, and hopefully that's why you're on the webinar today and hoping to learn a little bit about how you can improve some of this. The last thing I want to touch on before just handing it over to Mark is the frequency of tax errors on vendor invoices. So this is another one that we talk about frequently with our clients, and it's one that the answers in terms of how people are approaching this are all across the board. But I think what's interesting in this is there is significant potential for errors on vendor invoices, and you can see from this feedback from the group of this research that about a quarter of the respondents, 25 to 30%, said, you know, as we've looked at this, about 5% or less of our invoices have some kind of an error from our vendors, which seems like it's okay, and it probably is in a lot of respects. But if you think about many organizations, maybe like yourselves or others, where there could be thousands, tens of thousands, potentially even hundreds of thousands of invoices coming through every month or over the course of a year. Even a 2 to 3% error rate on those can add up to pretty quickly to some pretty significant dollars, and particularly if the vendors are overcharging for that. And then certainly as you get into the 6 to 10 or 11 to 15% error rate, which is not unheard of, and you can see there's about another 20, 25% of folks that said, hey, it's 6% or more. you can be dealing with some serious challenges there. And then I think the other thing as I mentioned before, just the lack of visibility or understanding the audit implications. Also here, and especially as you look at that manufacturing and wholesale line of 62% of the respondents said, you know what, we just don't know. And what that means is, in a lot of cases, these organizations are either not doing any inspection of those, and they're just trusting their vendors to get it right. Those of you who deal with this on a daily basis and understand how complicated tax is knows that that's a pretty that could be a dangerous assumption. So I think that's one of the things that we really notice here is that there can be a lot more attention placed on the AP side of the house relative to tax compliance. So just to summarize this particular section, what hopefully you'll take away from this is audit scrutiny on use tax self-assessments is increasing, and auditors are coming in and looking at those purchases more so and wanting to dig into some of that data. Those vendor errors on invoices are very common, and they can definitely cost you if you're not looking at those, and that visibility and awareness of both of these issues is really pretty low. And obviously what you don't know can hurt. And that brings us to our first polling question. So Paxton's going to launch this question for you, and we'll come back as we view the results as I transition things over to Mark here. But our first question is, over the past couple of years, have you seen an increase in audit scrutiny on use tax self-assessments? And the potential answers here are yes, significantly, yes, moderately, no, it's about the same as always, or you're not sure. So if you could all go ahead and answer that poll and take a look at that. Please do that. And with that, I am going to, as you're doing that, I'm going to pass things over to Mark Rems, and Mark's going to take us through, from a Grant Thornton perspective, what they're seeing in the market and some various approaches for this use tax compliance issue. So, Mark, take it away.
Great. Thanks, Mark. So my role really in this discussion is to talk about what we are seeing in the market. We have a lot of clients out there working in a lot of different industries, a lot of approaches for managing use tax. So I wanted to cover, what we see as the best practices, what are those pitfalls, just to give you a base point for comparing what potentially you should be doing at your organization. So really the first thing that we're seeing is just more increased scrutiny. And I think Mark covered a lot of that and did a nice job highlighting that fact. But the bottom line is it's no longer audits coming on site or auditors coming on site and saying, all right, let me look at the sales data and potentially just give me a fixed asset list, right? Where historically they might just be grabbing those fixed assets where tax wasn't paid to the vendor. They're looking for entire data sets. And it's not just because they have more time. They have these data analytics solutions, right, that can take these large sets of data, chug through it, and determine where they think an organization has dropped the ball on self-assessing tax, where they haven't paid tax to the vendor, and where they think that tax is due. In terms of company trends and some challenges that we're seeing for businesses around the use tax process, we're seeing a lot of systems out there, right? And one simple example would be your organization has purchased 3 new business units in the last 2 years. One's running JD Edwards, one's running Oracle, one's running SAP. So how do you make sure you get all your purchasing information to even evaluate whether you think you need additional use tax accruals? And for those folks that are lucky enough to be on one ERP platform, well, now you have all these additional ancillary systems that are touching your ERP system. So you might be implementing a digital marketplace like Ariba and Coupa that has some key master data, some transaction-related data that's important to get in order to evaluate taxes on those transactions, which might not be in your ERP system. And you might have additional back-end solutions like a vendor invoice management system. You might have separate inventory management systems where you also need additional data to really understand exactly what you bought and how it's being used. We're also seeing different use cases for how procurement can flow through your system. So self-invoicing or evaluated receipt settlement. And this all impacts what data is available and what transactions you need to pull to get a true full data set of all your procurement activity. In terms of what approaches we're seeing in the market for use tax, We are seeing the good old trust the vendor, which obviously we don't recommend for a lot of reasons. In some cases, if a vendor has charged you tax, they're in a better position to tell you what that tax should be. An example would be an origin-based state where your ERP system might not know truly where the product was shipped from, which can drive local rates. But for all those scenarios where a vendor hasn't charged tax, without the Wayfair case being heard and any major changes, they still might not be responsible for charging you sales tax. So just because you bought it exempt from sales taxes doesn't mean you've fulfilled your obligation that you don't need to pay taxes. So you need to have some process in place. We still see companies really focusing on the fixed asset piece. So if they're still in a manual approach, we generally see just folks taking a data extract of where tax wasn't paid to the vendor for fixed assets in that given month and going through it manually to determine if additional use tax is accrued. And obviously, you're missing a large piece of it. Potentially, you could be overpaying your vendor if you're going with that approach. In terms of how we see companies automating use tax, we really see two different flavors. One is a real-time approach, and we'll get into both these approaches a little later. Real-time being that as a PO is created, as an AP invoice is entered in the system, there's a real-time call out to a solution like Taxware Enterprise or Taxware SUT. A batch approach is less intrusive on the ERP system. You're not making real-time calls, but instead pulling the data at the end of a certain period, still running the same type of automation to determine where additional accruals are needed or if you overpaid a vendor, but doing that offline so you have more control of the process. Next slide. And I can definitely speak to this. I've been doing indirect tax implementations for a long time, and I can assure you, and Mark alluded to it, that doing an implementation on the purchasing side is generally more difficult than on the sales side. If you think about it, unless you're in Amazon, you have a finite number of revenue streams out there. They're very carefully coded. Every item is entered on a sales order. You know exactly what you're selling, where it's coming from, where it's going. In general, the data is just cleaner. But if you look on the purchasing side, there are a lot of different ways to purchase goods. You may or may not have a purchase order. You might just be booking a manual AP invoice to a GL account and a cost center. You might have evaluated receipt settlement. Your digital marketplace could be feeding invoices into your ERP system. So this all impacts the type of transactions you have to deal with and the data elements that would be available to make tax decisions. Whenever you're trying to automate use taxes or vendor charge sales tax validation, you got to understand what's being purchased, right? That's a pretty common variable that we need to know. Obviously, there are a lot of exemptions for service, a lot less exemptions for tangible personal property. And then even down to services, you get into these very specific rules in state and local jurisdictions. Well, is it installation of tangible personal property versus installation of real property? So you have to be able to differentiate that when you're looking at the data if you're trying to automate these use taxes. And a lot of times you're relying on key users, so procurement and accounts payable, to select the right master data, which you'll then use to evaluate those transactions. And in some cases, as I mentioned, you might not have a whole lot of data, good data to use in the tax decision-making process. So for a manual AP invoice without a PO, you might have a GL account and a cost center. Well, is that good enough to hit those really granular rules for sales taxes? Identifying how something is being used. Obviously, that's important. So the example of if I buy a computer and I use it in my back office for an accounting function, it's generally going to be taxable. If I buy that same computer and use it on the manufacturing line, there are a lot of exemptions in states and local jurisdictions where the purchase of that would not be subject to sales tax. You run into challenges there, right? You might pull something into central inventory and you have R&D departments, maintenance departments, production departments all pulling out from that central inventory. So at the time of purchase, you might not know exactly how that part or equipment is being used. And in addition, if you do lean on, some sort of cost center category functional area to drive that, how do you know because R&D pulled that piece of equipment out or part out that it's truly being used predominantly in research and development. So those are the challenges that you run into when you have to figure out that second variable of how something is being used. Identifying where a good service is used or performed. So obviously you need to figure out which jurisdiction has the right to calculate this tax. And you can run into scenarios where you might buy all your laptops, they go to a central location where they're configured, and then they're distributed out to your local offices in different states and different local jurisdictions. Well, those jurisdictions are going to want their taxes. And we all know the complexity around SaaS, cloud, market data, those services. What is the true destination of use? The vendor might be hosting that platform, and you have users all across the country that are accessing that software and market data. So how do you manage taxes with that? How do you allocate your use tax accrual across your different locations within the U.S. and globally? And then you run into other challenges just outside the standard purchasing process, samples and giveaways, pulling items out of inventory and moving product or equipment from a jurisdiction with a lower rate to a jurisdiction with a higher rate, and how do you handle that incremental rate change? So this is all the reason why that we think it's, significantly harder sometimes to implement on the purchasing side. And clearly you have some of these challenges on the sales side, but you really run into these complexities if you're trying to automate your purchasing and your evaluation of tax. Next slide. So
right,
here we have, go ahead.
Go ahead, Mark. Before you dive in here, I was just going to share the results of the first poll. Definitely getting validation on the challenge around audits for use tax. So we had about 26% of you said yes, the audits have increased significantly. About half of you, 47%, said yes, they've increased moderately. 5% said no, it's about the same, and 21% weren't sure. So definitely seeing validation from all of you that you're seeing some of that increased audit scrutiny. Sorry, go ahead, Mark.
No worries. So this polling question, how are you validating the tax charge by your vendors today? Obviously, a couple of different approaches there. We have a real-time tax calculation on our POs. You pull reports and spot check a portion of your invoices. You don't validate, or other.
All right, and as those are coming in, we'll keep moving along here, and we'll come back to that before the next poll.
Okay, so the next few slides, we're going to dive into the two approaches that we really see out in the market for managing use taxes. And the first is a real-time integration. So the big companies that have already implemented a tax engine like Taxware Enterprise on the sales side, a lot of times they just want to flip the switch and activate it to also calculate taxes during procurement and during accounts payable. And that's what this diagram in the bottom right highlights is, the different steps of the procurement process. Depending on which step it is, there may or may not be a call out made to the tax engine. That's where all the rules are maintained. All the transactions that are posted are maintained in that tax engine solution where you can pull and get your data to handle your compliance. A solution like Tax Solver is what you would use to convert that data into your tax returns, and that's the repository you would go to under audit. Generally, where we see a tax calculation being made in the real-time flavor of this integration is when the purchase order is created or changed and when the accounts payable invoice is entered. So there are a couple advantages of this, right? One is that there's a lot of slick workflow right now in digital marketplaces as well as procurement systems around approving your requisitions and approving POs. Well, the only true way to know the full cost of a purchase is if you evaluate whether tax is due and include that in your requisition for approval in that total amount, right? So having that tax calculation initiated when the PO is created will allow your PO approval process to account for taxes, which can be important. From the vendor invoice entry side, there are a couple implications with the real-time integration. One is that this is the only way you can give your AP clerks the power to short pay invoices. So if you're a manufacturer or you do a lot of R&D and your vendors don't exactly know how you're using these products and they're billing you tax and you don't want the cash to go out the door, then really you need an evaluation at that time. So as the AP clerk is entering an invoice for $1,000, the vendor has charged $60. We make a call out to a tax engine saying, hey, this is a part. It's going on my manufacturing line. The state has an exemption for that. I shouldn't pay tax. Then there's a warning saying, hey, my vendor charged tax. My engine said 0. We need to short pay the invoice. So the only way to allow that short payment is to have that real-time integration. Conversely, if you want use taxes accrued immediately when you're posting that invoice, it's the same process. So AP clerk would enter an invoice with no tax, call out made to the tax engine saying there is tax, and then an immediate accrual would occur depending on the mechanics of the ERP system, so that tax is accrued with that transaction. So, a lot of folks understand this approach, have seen it out there, especially if you're running a large ERP system. Even if you're not using a tax engine, there's the ability to configure this processing in the native tax engine like an Oracle EB Tax to handle those requirements, although it's a lot more maintenance on the tax department side. Next slide.
All right, Mark, I can just to interject here for the last poll, very relevant to what you were just talking about. About 28% of the audience said they have a real-time calculation on their purchases. About 50% are pulling reports and spot checking. 6% are not validating at all, and 17% are following some other process. So I think fairly typical of what we see. How about you, Mark?
Yeah, and that's, we probably need to dive into that 50% number on what exactly the batch process is, or the review, how much manual,
right.
Is there an automated fashion, is there some kind of matrix, but that's typically in line with what we see. So what are some key concepts in trying to figure out if the real-time approach is appropriate for your organization? The first that we always recommend is, does an interface exist for your accounts payable system or your ERP solution? So if you're running an SAP, if you're running an Oracle, if you're running a Dynamics product, it's likely that an interface has been developed, and that's really key. A, you don't have to support the interface. That's done by the vendor. And B, if there's not an interface, you don't have to develop one. And developing an integration to a tax engine, there's a lot of work behind that. We normally say, at a minimum, you're looking at another cost internally to make sure you understand when the call-outs can be made in your ERP system, gathering the necessary requirements, designing it, and that means designing for failure. So what happens if a response isn't received from the engine or you get an error? You don't want to stop the processing. All the development that has to be done, all the testing, because if something breaks during that call-out to a tax engine, potentially you won't be able to save your PO or your AP invoice or your sales order or your AR invoice. So there's a lot of work behind that to build your own interface. And that is a key driver on whether this real-time integration might be the right process for you. Another key question is, where does the data reside? So again, we have to understand what it is we're buying, how it's being used, where it came from, and where it's going. So does all that data reside in your current ERP system, in your procurement system, in your accounts payable system? If it is, and it's very clean, and you're confident that those data elements are going to drive exactly what was purchased and how it's being used, then real-time could work for you. If, however, you think you need to go to outside systems, so a common example is you might be buying a fixed asset, you don't really know the true location, it's booking it to a CIP account, and then later it's getting moved, and really until it gets into the fixed asset system, you don't truly know the actual location. In that case, you might need to pull the purchasing information, wait for it to hit the fixed asset system, and then pull in that location so you make sure you're accruing in the right jurisdiction. Same concept. Do you need to get data from the bank for P cards? Do you need to reach into SRM? Are there additional systems that have information that would be useful for this tax decision-making process? The next item is, how much review do you think you need for your accruals? So again, if you think you have clean data and you're comfortable that if it's hitting these material groups and it's going to these plants, that's exactly what it is and exactly where it's going, and you think that data will drive good decisions, then you're probably okay with real time and maybe spot check a couple large accruals each month. But if you really want to control the process and you think you need to look at things like vendor names, line descriptions, components of line descriptions, and you want more control of the process, it might not be the right answer for you real time, and you might want to look at the batch approach, which we'll discuss. Next slide. So just an overview of what this batch approach looks like. In the bottom right, that's a diagram kind of highlighting how it works. So it is, from a system flow diagram, somewhat similar to the real-time integration. So we're dealing with the same core ERP system, but instead of making calls when a PO is created or an AP invoice is created, we're going to pull data either daily, weekly, or monthly, batch it against a solution like TWE or SUT, use the same data elements, potentially more data elements, because now we can pull in data from SRM, a fixed asset system. We can also pull in other sources that need accrual validation, like pulling parts out of inventory used to repair equipment. If we're moving goods across states, if we're giving away samples, all that data can be combined in a central location before you kick off an automated process to say, hey, is my vendor overcharging me, and where do I need to accrue use tax? So really the big benefit here is that you can pull in data from multiple systems. We've done a lot of work with financial services companies, and when it gets down to market data and terminals, that data just isn't available in your ERP or accounts payable system. You might need to go to a whole different system that shows for this market data, this is the breakout by user, by cost center. And if it's being accessed through a terminal, which can be accessed through users all across the country, you need another way to get back to those original users. So you might need to get that allocation data, combine it with the vendor invoice data to truly know which jurisdictions have the right to collect that tax. Also, the tax has much more control of this process. Really, all you lean on from IT is to get that report of all your purchase activity from your data sources. That's really the only touch point there is, as well as loading a journal entry back into the system. From there, tax has complete control of. You leverage a batch solution to evaluate the transactions for tax, run your analytics, look at the proposed accruals, and ultimately it's up to you exactly what use tax you want to post for the given month. You still have the same ability to tie the tax back to the original asset, to the original cost center, because as long as those data elements are on the data you're getting from those extracts, you can summarize the accruals back to those same assets, back to those same cost centers. And the nice thing is you have all this data then. You don't need to go back to IT to say, hey, what tax did I pay to my vendor in this jurisdiction? How much did I accrue in this city for this month? You have all that information. You can run your own data analytics. Next slide. So there was a lot there on what we're really seeing in the market, as well as diving deep into the two approaches. Really to summarize, wanted to include this table, which provides a pretty good overview of why you would choose one approach versus the other. So in both cases, batch or real time, this is a completely automated process using the same data elements to figure out the what, the how, and the where. In the case of the batch approach, you can actually pull in more data, but the concept is the same, that each transaction is getting evaluated based on the what, the how, and the where to figure out if use tax is accrued or did we overpay vendor charge tax. A benefit to real time is you have the ability to short pay those invoices. So again, if you're a manufacturer, R&D company that have a lot of use-based exemptions and you don't want cash going out the door, you might really want that real-time integration so you can stop those invoices from being paid if they're erroneously taxed by the vendor. Batch, you don't have that ability. But if your concern is more around, well, I have all these different data systems, I have 10 ERP systems, 3 digital marketplaces, 2 instances of SRM, 3 fixed asset systems, and I got to bring it all together to really get the best data possible to make decisions, then really the batch approach is for you, unless you have a $10 million budget to do real-time integrations out of the tax department. The ability to calculate tax on the PO, that's really an advantage to the real-time approach, right? So if you want tax included in the approval process for those requisitions and POs and you want to know the true cost, that is only done with the real-time integration approach as it's built into the active workflow. And then finally, if you want more control of the process, if you want ultimate say on what is accrued and not want to have to go back and reverse accruals, if you want full control over that process, the batch approach really puts this in the hands of the tax department instead of AP clerks, still leveraging the same amount of automation, but gives you the ultimate say on what you want to accrue or not accrue. Next slide. So final polling question, and this will be interesting based on the topics we just covered. What percentage for real-time tax validation and use tax calculation process covers what percentage of your total purchases?
Yeah, I think, folks, you'll notice a range a little bit differently on the poll than what you see on the slide, but just, go ahead and use the poll. Obviously, most of you don't have real-time validation, so that's coming in. And then we're getting a good split on the rest of it. About 20% of you are doing pretty well, where you're saying about 80 to 90% of your purchase transactions are running through the real-time process, and about 6% of you said about 60, 70% of transactions, and 13% were in that 50 to 60% or less range. So interesting stuff there. And again, I think indicative of what we see is, given the various approaches and various types of businesses that folks have, there's definitely a myriad of different approaches here. That group doing the 80, 90%, though, I'd say, yeah, keep it up. That's a great percentage in terms of really consolidating all of your purchase transactions going through that validation. So with that, we'll transition over. Thanks, Mark, for all that, and we'd love your expertise as we work through the next section too. But we'd like to transition now to the use tax manager overview. So we'll turn things over to Tim Roden with Sovos, and Tim's going to take you through this latest innovation of use tax manager, and this is will help illustrate a batch approach and a really interesting solution on a batch approach, how you can manage this process. So with that, I'll turn it over to you, Tim.
Great. Thanks, Mark. Let me just make sure we're pulling up the right screen here. You're able to see the use tax manager overview?
Yes.
Perfect. Okay, so as Mark mentioned, and also Mark mentioned, right? There's a couple different approaches, and here at Sovos, we've absolutely been helping organizations to account for their accounts payable tax obligation via real-time integrations. But as Mark Rems mentioned, those could be expensive and they can be challenging. There's a lot of rules. So there's a feel that the market has been looking for this batch-based tool, and really excited to talk through how the use tax manager works in terms of automating a lot of processes that many folks are doing manually right now. Right? So in terms of the use tax manager, we'll walk through the application to show you how it's going to work, but these are really the three key tenets. The ability to centralize and enhance the data coming into the system. So if I have multiple purchasing systems or multiple ERPs or purchase card systems or procurement systems, use tax manager is going to allow me to take in data from multiple sources and centralize into a single location where I can have a consolidated view of all my purchase transactions. And it's also going to allow me to enhance that data. All right, so what use tax manager allows is for the ability to create these really granular rules to tell the tax engine the what, the how, and the where, right? So we can properly make a tax assessment. And then you need to validate and reconcile the information. So after the tax engine has basically made its determination, use tax manager is going to allow you to look at certain transactions and make decisions as to what it is you want to do to make sure that you can accrue the appropriate amount of use tax obligation. And then you'll have the ability to report off that information and send back to the GL, to the ERP, so you have funds available for filing. So kind of straightforward process that helps to streamline a very complex process. So from a centralized enhancement, as we talked through this a little bit, that organizations have many different procurement channels, and oftentimes on these AP transactions, there isn't enough information in just looking at the line item information on the AP invoice to tell what it is or how it's being used or where it's being used. And so that's where the enhancement comes in. Oftentimes we see folks reviewing this manually after the fact and going over and calling the person who actually the requisitioner and saying, how'd you use this? Or relying upon memory. And so it takes a lot of time to perform this process. So with Use Tax Manager, let me jump in and show you the interface here. So with Use Tax Manager, you're going to have a web-based application that's going to allow you to centralize and enhance all your purchase data. So it's really as simple as loading the information directly into the system, basically a file upload. So an extract out of one of your purchasing systems. You can see here there's a couple of different import profiles that match up to specific purchasing systems. But then also the system is going to give you the ability to define your own import profile. So if it's a new system that you're importing from, it's very easy without requiring a lot of IT involvement to basically do a mapping of a source system file into the Use Tax Manager. So you can identify some specific file properties, and then it's really just as simple as the application will read the incoming information from that file, and you can match it up with information within Use Tax Manager in terms of what field this actually equates to. So very simple to get the information in, and then you can also assign these data enrichment and validation rules to the specific file format. So for example, you could create a rule to say, when we see these 4 characteristics, assign a purchase class. So if it's this cost center, this GL account, this vendor, we know that's going to be used for manufacturing, so apply a manufacturing tag. Then what that's going to do is it's going to eventually tell the Sovos Global Tax Determination Engine that, hey, this purchase was used under a manufacturing exemption, and then the engine will be able to determine how to appropriately apply tax and evaluate tax. So again, very simple to get the information in and write rules that will allow the system in an automated fashion to enhance the data so that it can properly leverage a tax determination within the Sovos Global Tax Determination System. And again, as Mark Christensen mentioned, you'll have these slides to kind of remind you of exactly how the tool is going to work here, the ability to map the information coming in, as well as create these data transformational rules. So it eliminates a lot of the manual processes associated with that may be going on now, where you're reviewing a spreadsheet after the fact to try and determine, how is this used. You can create these rules that will automatically apply that logic. So after the information has come into the Use Tax Manager, that's where the validate and reconcile piece kicks off. So again, right now, if this is being done manually, it's oftentimes done with spreadsheets, and you're reviewing certain items. Maybe it's specific vendors, maybe it's high dollar invoices, maybe it's no sales tax invoices, and it's all a manual process, and you're definitely missing, you're not reviewing everything. And then once you do find something, you've got to do the manual research associated with it to figure out what the tax should be. So it's really just a time expense here. So with Use Tax Manager, let me show you how the system is going to help you validate and reconcile this information. So once my information has been loaded into the system, it's all going to display, or only the transactions that I want, will display in this reconcile worksheet. So again, I can write rules to say, If the vendor tax equals the Sovos tax, I don't even want to see it. I can just ignore it. I know that it's correct. Or if it's, again, if it's a trusted vendor, I don't want to see it. Or if it falls within a certain threshold, I'm willing to accept the risk on that. I don't want to see it. So this is going to just present to me only those invoices or only those purchase transactions that are going to require some sort of action, right? So for example, you can see vendor tax doesn't equal what Sovos said the tax should be. So the user then gets to, you can potentially drill in and look at the detail associated with that transaction to make a decision. Do you want to post it, which means that you want to take what the Sovos tax should be and effectively accrue the additional tax that's owed in that jurisdiction, or do you want to ignore it? Again, this can all, and you can further to help with the workflow here, you can further filter it based off of a number of different categories here to really slim down the manual effort in terms of providing analysis on these transactions. So that's really going to assist with, again, doing that analysis. Okay, you identified these transactions. The tax engine has been able to look at all the information associated with that transaction to make a truly accurate determination and provide you, the taxpayer here, with the ability to do a comparison and decide what it is you want to do with that particular AP invoice. And the final step is to report off of this. So oftentimes, if this is being done manually and I'm doing an assessment, I figure out that I do have, an additional use tax obligation here on this transaction, another one here, then I've got to calculate, maybe distribute based off of different jurisdictions, and somehow get that information back into my ERP so that I can leverage it for compliance filing. So with the use tax manager, the system has pre-built reports that are going to help you understand what your total tax obligation is, identify any vendors who have been consistent in overcharge, show you all those zero tax invoices, generate journal entries that will go back to your general ledger, and then also provide you with some of these dashboards that higher level users can view to do a quick analysis on who are the biggest offending vendors, or where's our total tax obligation and what jurisdictions or what cost center. So we'll take a look at what that looks like within the system here and some of the reports that are available. So again, these reports will be generated in an Excel file, and you'll be able to, based on the decisions that you've made in terms of whether to post or ignore, be able to run some of these reports, again, to get you a sense of total tax, use tax obligation, or what specific vendors have been overcharging. So again, this is a batch process. These invoices have already been paid. I can't short pay the vendor invoice, but I can generate a report that I can then hand over to, maybe one of the supply managers, and they can basically come to the vendor and say, here's a list of all the invoices over the past 6 months that you've overcharged sales tax on us. Let's work through this. Let's figure out how you can properly charge us. So it's not necessarily going to allow you to short pay, but it will identify the problem areas and help you take action on that. And again, you can also generate the journal entry to send back to the specific ERP. So after you've made the decisions throughout the course of the analysis, you can define a journal entry for a specific period so that all those decisions, all those accruals that you've made within Use Tax Manager make their way back into your ERP system. And given the time, it was a very fast tour of the Use Tax Manager, but we just wanted to give you a sense of some of the tools that are available to, again, help our clients to centralize and enhance that data, validate and reconcile it, and report back on those decisions that have been made within Use Tax Manager.
All right, excellent, Tim. Thanks. So I think just to wrap up this section, both with Mark and Tim, that there obviously, as you look at this, there's numerous different approaches that people are taking on this particular compliance obligation, and certainly as you think about automation and technology, there's various approaches that you can take as well. And we know that a lot of the conversation in the marketplace is really around real time, and it is a great option depending on, again, your processes and what your objectives are and what you're trying to accomplish across your organization. But we just wanted everybody to know it's not the only option. And Mark really did a great overview of thinking through the advantages to your organization and some different considerations for when real time might make the most sense versus this batch type approach. So we want to make sure that as you think about this, whatever approach you have is going to cover all of your purchases or as much of your purchases as you can, looking to that about 20% group of the attendees here where they are able to consolidate and actually do a real-time calculation on 80 to 90% of their transactions. That really should be your goal, is as you're thinking about how to automate this process, how can I get 90 to 100% of all of my purchase transactions being validated in some way, whether it's through this batch process or through a real-time process. So I have that visibility into my obligations, whether it's a use tax accrual that's necessary to meet an obligation, or it's a vendor invoice where the vendor either overcharged or undercharged, and having visibility to that because as I might need to make an adjustment to account for that. As you looked at tax manager as well, thinking about how the tax team can have the most control. The tax team is the group obviously that has the most knowledge around this. And obviously deals with a lot of the challenges around trying to figure out where and when to accrue tax and not, and then obviously is usually taking the lead on the audit and dealing with the auditor when they come in. So some considerations there, and really this visibility, and the thing we hear over and over from folks is, I wish I had visibility to where some of these exceptions are, and the ability to work with a system that would help me see that, and then also be able to configure things and work within the technology to improve the process as we go. And I think as you heard Tim talk through the process here, and we think about those data validation rules and those other configuration rules as you go through, each time you go through this process, you can set up new rules to account for the various scenarios that are coming through, and the process is going to get smarter, more efficient as you go, and so it gives you a lot of flexibility in that regard. All right, Tim, you want to go to the last slide here, and we'll wrap it up, I think, with our last polling question. So the last polling question that we have for you here is really just a request for you. Is if you hopefully you saw some things that you can connect with here throughout the course of the webinar. If you're interested in having a further conversation and digging into Use Tax Manager or your AP tax compliance needs a little bit deeper, and would like somebody to reach out to you, just let us know here. All right. And with that, Tim, I think if you want to just move us forward one more slide. We have a few minutes here left for questions. And one of the first questions here, I'll put this out to both Mark and Tim, but at what point are and Tim, maybe this is for you, at what point are the payment records centralized? Our system currently creates an accrual when the invoice is paid.
Okay, I think I understand. So as opposed to when the invoice is, so this is really an on-demand type of opportunity here to be able to extract the information out of the ERP system. So whatever status it is that when the invoice goes into, you can choose to provide an extract of invoices in that given status to then load into the Use Tax Manager. So, our thinking is that these would be paid invoices, right? So we would do an extract, or our clients would do an extract of paid invoices out of the ERP system, and that's what would be loaded and centralized into the Use Tax Manager.
Yeah, and I think that's one of the big benefits to a batch approach, right? Is that if you're using SAP or Oracle, you don't have control when those calls go out. So when the invoice is posted in the ERP, that's when the tax is going to be accrued. You don't have the ability to in the U.S. if you wanted to switch it to when the payments come in the door, or if you need to, pull inventory withdrawals. They're not creating an accounts payable invoice, but you still need that data. With batch, you control what data you need and what status of that transaction is when it funnels through the process.
Great, thanks, guys. And then I guess the only other question we have so far is, can I receive the slides from the presentation? So yeah, again, if you join late, we'll definitely send out a follow-up with the recording of this webinar and a copy of the deck and give you access to that after the fact. All right, so I think that is all the questions that we have, and we are right up against time. So Tim, you want to just go forward one more slide here? I just want to close by thanking everybody. Again, thanks, Tim, for taking us through the Use Tax Manager solution. Special thanks to you, Mark Rems from Grant Thornton, for adding your expertise around what we're seeing in the marketplace and really helping people think about the various approaches from a batch to real time to dealing with this complex issue. If you are, again, interested in contacting us, we give you a couple of ways to connect with us here on a contact form on our website, and then also definitely encourage everybody to follow us on LinkedIn. Find us there. We're continually updating new compliance information about our latest solutions, as well as thought leadership around what's happening in the market and various ways that tax leaders can really and IT leaders can really think about these complicated compliance issues and implement the right technologies to be able to help your organization grow in a really healthy way and stay ahead of what's happening in the market. So with that, we'll wrap up today. Again, thank you everybody for attending, and we'll look for you on the next webinar. Have a great week, everybody.